Hello, everyone, and welcome to today's webinar, Thinking Like a Millionaire Real Estate Investor with MAPS coaches Matt Teter and Brian Martin. Please note this webinar is being recorded and you will automatically receive the webinar recording. If you have questions for your coaches, please type them into the questions box located in your webinar taskbar. Following the webinar, if you have any questions about today's call or coaching programs, please email us at fasttrack@kw.com. That's all for me. Take it away.
Oh my gosh, Angel, thank you so much for that introduction.
That was great.
That was incredible. We should probably get started here, Brian. And the other thing to know is you're going to see this recording. You're going to get the registration link in your email when it comes out to you. So it's going to be really easy. If you somehow get confused, you can go to mapscoaching.com. You click on coaching, you go to group, and this course is going to be becoming a millionaire real estate investor. So really exciting. Going to launch on March 3rd. And what Brian and I want to discuss with you today is, well, how do you think like a millionaire real estate investor? How do you think like that, right? And so, Brian, on page 78 of the MREI book, Gary's got these 7 ways that a millionaire real estate investor thinks. And he says, I'm going to read them. We'll go through them, right? So he says, think powered by a big why. That's number 1. He says, think big goals, big models, big habits. That's number 2. He says, think money matters. Think net worth. Think real estate. Think value, opportunity, and deals. And think action. So speaking of thinking action, that's a lot to cover in 30 minutes. So Brian, let's think action right now and start with number 1. Which is think powered by a big why. When you think about becoming a millionaire real estate investor and thinking powered by a big why, what comes to mind for you?
I think it's well, first of all, there's a lot of thinking going on, right? And obviously it's because as we think big, it causes us to take different actions. One of the things that Gary writes in another book, in the One Thing, it's on page 88 and 89 in the One Thing, is that when we set a big goal, it causes us to think big, we take bigger actions, and we actually have a bigger result than if we think average or what we would expect or anything like that. So think powered by a big why. I think people get caught up on this, right? Like, what are the things that, is my why big enough? Is it going to be my big why forever? What is it? Gary actually looks at it and he says the purpose of like defining what your big why is simply to look for and articulate the factors that drive you to take meaningful and persistent actions. So sometimes it's, what gets you up in the morning? What's the thing that you're excited about? What do you choose for your future? So thinking with big why in mind actually causes you to take this to a different level of thinking, and the way you act or the way you plan may look differently.
Under the definition that you just gave from Gary, Brian, it's kind of relieving because thinking powered by a big why in investing could be as simple as, I'd like to have a vacation home where my family goes every year. Like that fit what you just said. Now, there's the really big version of thinking powered by a big why, which is what Gary opens the section with. He defines how Napoleon Hill in Think and Grow Rich describes it. He says, what a different story men would have to tell if only they would adopt a definite purpose and stand by that purpose until it had time to become an all-consuming obsession. And Gary adds, motivation matters. So I think that version, that definition is how a lot of people perceive the big why. What's so great is Gary kind of chunks it down with his definition later on. And for the investor side, it could be as simple as, hey, I want to own a vacation home, right? And own the property where my family goes every year. And that's enough of a motivation to really start thinking about how am I going to make that happen? Brian, is there anything you'd add before we move forward?
I think it's just some of it's the thought of, many people count their income is what they actively work on every day, right? And what Gary talks about in the book is it's the difference between our active income versus our passive income. And, sometimes the big why is, do you receive passive income today, right? And from how many sources do you receive that? Is there a point that you choose when you work or you choose what you do because you have enough passive income that it pays for your bills, it pays for the things you want to do. So sometimes we talk about that as a freedom number. So we could go into that in a little bit here, but I think that's part of the big why. The only other questions I would say is Gary asked these questions. Once you define your big why, the next step is then to ask yourself these questions. Do my professional goals line up with that vision? Right? So if my goal is in 10 years to have enough passive income that it covers all my living expenses, pays for the things I want to do for myself and my family, allows me to continue investing in things, and whatever I can think of at that time, does the path I'm on, does my professional goals, does that actually line me up for that within 10 years, or do I need to make those changes, right? What's the best way to finance my big why, and are my relationships in line with these goals?
Great questions. So with those incredible questions, we'll keep moving forward with think big goals, think big models, and think big habits, as he talks about on page 82, right? When I think about this, what's so interesting, Brian, is that Gary has this same conversation in the MREA, in the one thing, and here in the MREI, right? Now, he has it different ways, right? You can see it on page 88 and 89 of the one thing, right, as well. Here you see another model that he draws out on page 84 of the MREI, which is what we're focused on, obviously. And the concept of thinking big models, thinking big goals, thinking big habits, we got the privilege to work with Gary Keller to write the MAPS Models course. And in the leadership part of that course, Gary challenged us to realize that the way that we think leads to the way that we act. The way that we act leads to our habits that we form. Our habits form our key relationships, and that creates our ceiling of achievement. So it is really about our thinking, and it's thinking big so that we can have a high ceiling of achievement. And that's kind of the way I look at some of these things. Brian, what comes to mind for you when we're on this path of thinking this way as a millionaire investor?
Yeah, so the whole idea of big goals, big models, big habits. It talks about, so we talked about thinking big a little bit, right? Big models means like, are we looking at the ways that we can get there? The conversation you have to, let's say, increase your net worth to, let's say your net worth to $500,000, it's a different conversation than you'd be having if you're saying, I'm going to increase my net worth to $1 million or $5 million. It causes you to think at a different level. Something I thought was interesting in this portion of the book, Gary says, while most people would say they want a great life, they rarely plan beyond the current year. As a result, they choose a financial model that fits only their short-term goals, and their financial short-sightedness can be devastating to their long-term dreams. In other words, sometimes people are making decisions about this year that cause the outcome, 5 years or like we said, 10 years from now, to be, almost like we're not going to be on that path until we make some changes.
Yeah, Brian, there's a story that's been cited many times based on what you just said, and that model on page 82, the big goals, big models, build big habits model, figure 3, right, that Gary covers is, how does our net worth increase over time? And that's what you're talking about. And some of the story that's been told is the artist, Rihanna, right, sued her financial manager, right? And the financial manager was asked about this lawsuit, was interviewed. And he said, was it my job to tell Rihanna, the artist, right, that if you spend the money, you'll have the things and not the money? And that seems really fundamental and ridiculously simple. And yet when we tell that story and we think through that conversation, what we realize is that that's the figure that Gary has on page 84. It's if my model and my habits are $1 million net worth habits, and I'm probably not going to spend the money on the things as often as I'm going to focus on having the worth, right, from my assets or from my investments. And that's what you're talking about. It's just an example of the extreme version of how somebody who's a multi-millionaire ends up in a situation where they don't have the money because their habits go the other way, right?
Yeah. So the next step is, I was going to say the next step here is to think money matters. So Matt, you want to talk about that a little bit?
Well, yeah, I was going to say, it was like, we're talking about money. Well, money matters, right? And it's thinking about the fact that it's fundamentally matters in this process. I think one of the things for the millionaire investor, thinking as a millionaire investor, is, a millionaire investor is way down the road for many people wherever they're starting. I certainly didn't start with all of the wherewithal and all of the assets and all of the income to just jump to millionaire investor. So we do think like a millionaire investor, and thinking about the money is, what capital do I need to generate in order to have the ability to fund my life, my lifestyle, in my investments? And later in the book, there's the comment that's made that, if you were to think about the fact that you took 10% of your time to look at real estate investments and you took 10% of your money to make investments, that might be a great starting place. And the suggestion is made in the MREI. Well, that's understanding and thinking that money matters. We do have to be able to earn the income in order to allocate something to make the investment. Brian, what else do you see in this section?
I think it talks about really there's a model in here called the money matrix, and it really talks about the difference between, you working for your money, right? Generally, when you're working for your money, you're thinking about, we use 4 C's, right? You think about in this order, you think about consumption. So consumption would be like the money spent on anything that's not expected to grow in value. So think cars, clothes, most of the things that people buy on a daily, weekly basis, right, is consumption. Then we would think about cash. We think about cash flow, and then ultimately capital. The mindset of the millionaire real estate investor is switching that and actually going the opposite direction. Think about how money works for you. So you start with, like you said, we're starting with capital. That moves to how do we increase our cash flow? Then we're going to look at the money that's held in reserves, right, for any future investments. That would be our cash. And then ultimately what we have left, that's our consumption. You determine that, the consumption actually grows based on the capital, right? So the more we're thinking that way, it's a difference in the way we're thinking.
Yeah, differently transposed or displayed in the book are the figures on page 92 and 93 of what exactly you just said. And the titles of the figures are really interesting, right? One figure that you discussed, which is when you earn income, that income becomes, right, in the thought process, capital. That capital is invested to generate cash flow, and that creates, right, a positive growth of your money. That's what Gary calls a financially wealthy money matrix in action. The opposite of what you just said, right, kind of a challenging title for us to look at, is income comes in and consumption goes out. So basically it's income in and cash out, right, or cash in, cash out, and it's not taken in as capital or turned into cash flow. And he calls that a financially poor money matrix in action. And so some of these things in the thinking are, who do I decide to be, or who do I choose to be? Do I decide to be financially wealthy, or do I decide to be financially poor? And if I were to just look at those two figures and look at how I allocate my income, right, it's good for me to see not just who I decide to be, who I'm showing up as, and what I would need to change to move in the direction that I decide. It'd be pretty surprising for somebody listening to this, if you're here listening to this right now or listening to this recording, to say that you wanted to be financially poor. So it'd be really important to say, what do I have to shift or change in my activities to move to that financially wealthy money matrix? Now, Brian, we know that one of the most powerful things as MAPS leadership coaches, as MAPS coaches, right, that we challenge our clients to track and understand is their net worth. So the next piece is thinking net worth. What strikes you about this component of how millionaire real estate investors think?
I think first of all, people tend, as we start looking at net worth, people tend to shy away from it, thinking like, oh, there's this big equation, or am I ready to have that conversation, or whatever it is. Gary actually makes it very simple. He says when he started tracking his net worth, he simply made a list of all the financially significant things he owned: stocks, bonds, real estate, furniture, car, whatever, right? And then he subtracted the various debts and liabilities. The number that was left was his net worth, and he asked a simple but profound question: what's the best way to make that number grow? Looked at it every day, reviews it once a week. And then we look, and he basically puts purchases that he's, thinking about making against that number, against that equation, right? Is this increasing, my financially significant things? Is it increasing the things that I own, my assets, or is it increasing liability? Or is it just making this number go lower? In that case, I'm going to have to think about, is that worth it or not?
What do I own minus what do I owe? Right? Not complicated, right? It gives me a number. That number, your net worth is not the personal worth of you as a human being. It's not your value as a human, right? It's the economic value of the assets that you have minus the liabilities you have against them, right? So it's not, we need to make sure we decouple that from who we are, right? And make sure we look at it as, right, a report card on how we're doing financially. And yet when we focus on that, what we measure grows. So what's so important about tracking it is, right, many people start, Brian, negative, right? Many people start at zero. Yet if we track it, we measure it, and we're intentional about choosing, going back earlier, thinking big models, choosing something at a high level, and then making our decisions, right, and looking at how they show up as an asset or a liability and how they affect that number, we start making better or financially wealthier decisions with how we think and how we spend our money, and therefore we can grow our income, our net worth, our assets, and become a millionaire investor, right?
Yeah, I think the other thing that probably leads into the next section here is he also says there's different kind of assets, right? So we have assets that appreciate, think real estate. We also have assets that depreciate, meaning they go down in, like appreciate means it goes up in value. Generally, depreciate means it's going to go down in value. So simple example would be appreciate would be think real estate. Over, historically it goes up. Not always true, but most of the time, depreciating asset would be like a car, right? How many cars have you bought that the value went up? There are some, but they're not a lot. So the point is, it's like even in maybe it's the next layer deep on looking at your net worth is the assets that I have, is that actually, if things don't change, does it actually cause my net worth to go up or down? Which brings us to the next topic, which is thinking real estate, right? Real estate is that asset that actually, Gary says it's like an accidental investment, because most people get into it because they say like, I want to buy a house to live in it, right? And you buy a house and you live in it, and pretty soon you start to see like, oh, I got equity in this. Oh, this is actually kind of smart. I like this, right? And we even see this like in an early investment, Matt, like you said, like the big why might be, we like to go vacation this place, in this area, this city, whatever it is. We're going to buy a property there so that we can be there while we're vacationing, right? And we'll rent it out the rest of the time. And then pretty soon people look up, a couple of years down the road, 5 years down the road, and they go, wait a minute, we've been making money on this thing and it's worth more, and like we get to use it and we don't spend as much money on our vacations, and pretty soon it's like it's another kind of accidental investment. So I think one of the things that we're talking about today is you don't have to be the smartest person in the room to figure these things out, right? Like the things we're talking about today, it's an overview of how to think, and you probably already have made great decisions to get here, right? So what we intend to be talking about, today and throughout this course is how do we just get more purposeful in this, make a few decisions that make a large difference in the outcome.
Well, yeah, the other reason why to think real estate as a millionaire real estate investor, if you're in this conversation, it's highly likely that you're here because you're a real estate professional in some sense of that word, likely a real estate agent, right? And so, in a lot of other professions, if, like the stock market, for example, if you took information that you knew about your business and you went and you acted on that information, that's actually a federal offense, right? You could be in prison for that. It's called insider trading, right? In the real estate profession, you have information about what's happening in a market and what's occurring, right? You can utilize your insight and professional knowledge to be able to make investments in something that you have an area of expertise in. So I think part of us thinking real estate as real estate professionals is this is what we know, right? And we have the ability as one of the most powerful asset classes in the world to be in a business where we choose to invest in what we know about, right? We can enrich ourselves, right? And increase our net worth and generate passive income, which are huge opportunities, right? So Gary also says, real estate is accessible, it's appreciable, it's leverageable, it's rentable, it's improvable, it's deductible, it's depreciable, it's deferrable, it's stable, and it's livable. So when you think about all of the things that you can do and the performance of that asset, right, those are some of the other reasons to think real estate outside of the, other pieces that he covers through the models and systems and the rest of that section. Now, where he goes next in our conversation, and our sixth way that a millionaire real estate investor thinks, is they think value, opportunity, and deals. Value, opportunity, and deals. So, Brian, when you think about thinking value, opportunities, and deals, what strikes you there?
I think we just start with value, right? So he simply says, if you're considering, investing in an area, get to know what value is in that area, right? So one that you and I talk about a lot is like, a lot of times people own a house, right? So they generally, especially if you're in real estate, you own a house, you tend to know what else is going on in your neighborhood, right? What homes are listed for sale, what homes sell for. You see something go on the market, you go, that's overpriced or underpriced, whatever it is. That means value, right? So it's the same thing. If you think I'd like to, my ideal investment would be a 1-story, 3-bedroom, 2-bath house in this neighborhood. You look at every house that comes on in that neighborhood and the surrounding neighborhoods to figure out what's value look like there, what's in that average price point or in the price point you're looking to invest, what's included in those homes, how much work. You're really looking at the transactions and saying, where do I fit into this? And if a great deal came across the table, what I know, that's an awesome deal. I got to take action on that.
Yeah.
I think opportunity. Go ahead.
No, I think the only other thing I would add on value, Brian, and I love what you said is, I seem to recall Gary telling the story in Quantum Leap for Kids one time about, like holding up his Nikes and saying, or his shoes, right? Whatever shoe it was, holding up a Nike, I believe, right? Saying, how much is this shoe worth? And people said, oh, that shoe is exactly this much money. And it was surprising how many people knew exactly how much the shoe cost, right? And so the point we're making is that we know the value of things. The question is, do we know the value of things that allow us to become, millionaires through passive income? Could you do that through shoes? I guess, right? Pretty unlikely. Could you do it through real estate? Absolutely. So it's not that people aren't investing the time or generating expertise of knowing value of things. It's, are we knowing the value of things that could generate what we desire to have in passive income and wealth?
Yeah. So it's first just knowing the value, then it's looking at, are the things that are put in front of you, are they opportunities or not? So through that practice of looking at other transactions that are happening, other sales that happen, whether it's your neighborhood or an ideal neighborhood for you to invest in, is that you get faster and quicker at saying something that comes up, is that something that's an opportunity for me to invest in? For the things that I intend to get from this investment, would that work? Does that meet my criteria? If I can get good terms on this, is that an opportunity for me or not? Ultimately, then the next thing is make a deal, right? And there's quite a few different stories that we hear from investors, including Gary himself in the book, where he talks about, kind of the one that got away, right? Or the fish was this big, right? The point is, like, if you're in that position where you say, I know what the value is, I've determined it's a good opportunity for me. The third one is action. We're going to take action, make a deal, put it together before anybody else figures it out. It's a great opportunity, right?
Well, yeah, the seventh one is think action, right? The seventh way that millionaires think is they think action. And what Gary talks about is he says that there's 4 investment profiles, right? And you were describing a lot of them, what you just said. There's one where there's the investor, right? They love opportunity and they buy the right thing. That's what you were talking about. Be that person. Learn how to become that person, right? The other ones are not as necessarily as exciting. There's the collector, right? They love ownership and they buy something. Not bad, right? Okay, it is what it is. There's the speculator. They love the action and they buy anything. It can be harmful, right? They may have a fluctuation in their net worth and be buying things that don't fit their criteria or move them towards what they desire ultimately. And then there's the observer, right? They love ideas and they buy nothing. And so the purpose of this course in many ways is to get people, off the sidelines and into the game by understanding who they are, what their criteria is, right? What they're looking for, and each person's individual and unique in that, right? In getting into action and thinking action so they can be that investor, loving the opportunity of it and buying the thing that's right for them based on their goals.
Yeah, I think the other version of take action would be just this, right? So we spent this time together on a webinar, and we're talking about a lot of things. So you may have said, "Ooh, I want to dig deeper on that," or "I want to know more about that." That's actually what our group course is. So Matt, if you want to give some more details, I think one of the things about taking action would be put yourself in an environment where this is the conversation that we're having. You have people that are supporting you to take the next step on your investment journey. So what does that look like?
Well, Brian, I appreciate you saying that. We're going to kind of wrap up today. We hope and trust that you receive some value of reviewing this and some of the ways of thinking through this, kind of looking to bring to life what's in the pages of the Millionaire Real Estate Investor, right? Just a quick thing to talk about is that Brian and myself are not attorneys. We're not certified financial planners. We're players, right? We're not accountants, right? We're not the people, right, that are going to give you the individual financial advice that you need to be able to make that decision. And by the way, even though we've been licensed as real estate professionals in the past, right, we're not actively licensed in any of your states, right? Unless you're in a couple of them. And to be honest, don't worry about that. So we're not even able to sell you the property. We're not coming from that standpoint, and we're not advising you that way. This course is about teaching you how to think. It's about giving you the opportunity to walk the path and the journey along with Brian and myself. Why are we doing this? Well, the truth of the matter is Brian and myself are on the path ourselves of what you're going to hear in the book, right? We believe that we've thought $1 million, and we're going through that. He and I are in the process of buying $1 million, moving into owning $1 million, right? As we move ultimately to receiving $1 million. We're going to ask you to be on that journey with us. As Gary says, it's not a requirement to lead or to coach, right, other people, that you do everything yourself. People like Phil Jackson wouldn't have been able to coach Michael Jordan or Kobe Bryant, right? Bill Belichick wouldn't have been able to coach Tom Brady, right, and others, right? What does matter is that you're on the personal journey, that you're learning, that you're growing. So Brian and I are inviting all of you along with us on the journey that we're personally on as we invest in real estate. We're going to use the Millionaire Real Estate Investor as our guide, as our template, really as the book that we utilize together to explore the ideas and the concepts, right, to be able to do that. Now, we're not just going to cover the book. It's not a course just about covering the book. What we're going to do is we're going to do some expert interviews, and we're going to go out and we're going to interview some people that have done it. They're already at the receive $1 million phase, and they're going to talk you through what they've done to invest, the mistakes they've made, and the challenge they had. That's going to be bonus content. Brian and I are going to do a little bit of bonus content around some tools that you could utilize. Now, he and I, what do we do primarily to earn our income, as we've covered earlier? For coaches, right? And so we hope and trust to challenge you with powerful questions to be able to cause you to think differently, right? As coaches, to have you say, okay, what can I do to move forward? What does that look like? And so we're going to take some tools, some resources that we use with our clients, right? And share them with you and say, what if you use this to create your formula, your path to becoming a millionaire real estate investor? On a weekly basis, right, for about 10 weeks throughout that course, or over 3 months, we're going to have an hour-long session where we're going to work with you through some serious content. We're going to have a lot of fun. We're going to have a lot of engagement. We're going to provide bonus content and interviews. There'll be a private community that you'll be able to be a member of to be able to build your network and your referrals and ask more questions. And we're going to give you some tools and resources. So it's our intention to create a community, to provide resources, and to cultivate an experience that lives far beyond just the first course. Brian, is there anything we missed?
No, I'm just grateful for people that joined us today or that watch a recording of this. Thank you, and hope you join us on the journey, and have a great day.
Yeah, absolutely. And remember, if you want to register, you can use the link that's in the email, or you can go to mapscoaching.com under the group courses. And this is Becoming a Millionaire Real Estate Investor. We're excited to walk that path with you.